Sarah, a tutor at Accountancy Learning, and in this video I'll take you through the Tax Processes for Business Finance Act 23 AAT Sample Paper 1 Task 6. So this task is about VAT rules on record keeping, filing, payment and repayment, including non-compliance implications. And we're going to have three parts to this task. Part A then, identify whether the following statements about VAT legal requirements are true or false. The first one, HMRC only considers that a VAT return is late if it is received by HMRC more than 3 working days after the due date. So this is false because HMRC will consider the VAT return late once it's past its due date. There is no flex in that. Once it's gone past its due date, it will be considered late. The second one, HMRC has the power to issue an estimated assessment if a business fails to submit a VAT return. For this one, we can use some reference material to help us identify the answer. And we're looking at reference material 18. And it says if a VAT return is not submitted on time, HMRC will issue a VAT notice of assessment of tax, which will state how much HMRC think is owed. So using that reference material, we can see that that answer would be true. Then the final one, penalties will never be payable as a result of a compliance check from HMRC. So this is false because HMRC can issue penalties at any time when they carry out a compliance check. Moving on, the owner of GV Building Services, who's a sole trader, is aware that the business reached the VAT registration threshold 6 months ago on the 31st of March 2023 and failed to register for VAT. And then we have a statement that we need to complete. So GV Building Services will face a penalty from HMRC for a maximum of, and we've got 3 percentages to choose from, of the potential lost, and then we need to select profit or revenue. So the key elements of this information then is that GV Building Services are aware that they've reached the VAT registration threshold 6 months ago on the 31st of March 2023. So let's bring up our reference material that will help us with answering this question. And we're going to be using reference material 3. So when we're looking at this reference material, we can say that this has been a deliberate act by GV Building Services because we're told that they are aware that they've reached the VAT threshold and they haven't registered. The question doesn't say anything about it being concealed, so we're going to be using this line here. And then for the deliberate act, the maximum, so we're looking for a maximum here, is 70%. And the reference material even tells us that it's from lost revenue, which is going to be the second part. Next, we need to identify the date from which HMRC will treat GV Building Services as being registered. So HMRC are going to consider them as if they had registered on time. So using reference material 2 now, we can then have a look at when the registration would be effective from. So we're going to be using the historic test. And it's going to be the first day of the second month after the threshold has been exceeded. So the date that they reached the threshold was the 31st of March, 2023. So first day of the second month after. So the next month would be April, and the second month after would be May. So it's the 1st of May. Then the final part of Part B is from the date that registration should have taken place, GV Building Services can, and we're given the option of attempt to recover any output tax due from customers, or insist that customers pay for any output tax that was due. So again, we can now have a look at reference material 3. So this is reference material 3. And it says HMRC will treat the business as though it had registered on time and will expect VAT to be accounted for as if it had been charged. So the business then has two choices. So it can either treat the invoices of VAT inclusive and absorb the VAT which should have been charged, so therefore it's a cost to the business, or they can account for VAT as an addition to the charges that have already been invoiced and attempt to recover this VAT from its customers. So based on the two options that we've got, it will be attempt to recover any output tax due from customers. Let's now look at Part C. So in Part C, we're given a lot of information to work with. It says Minhall plc operates the annual accounting scheme and makes VAT payments monthly to HMRC. The VAT due for the year ending 30th of September 2022 was £39,690. And the VAT due for the year ending 30th of September 2023 was £40,770. So we just need to be aware of these two year ends here. So our question then. Identify the due dates and payments for Minhall plc for the year ending the 31st of December 2023 by completing the following statement. Minhall plc will make payments of, and we've got a select number, per month commencing on, and then whatever the date's going to be, with a final payment of selecting an amount by a particular date. So annual accounting scheme then. So we can now have a look at reference material 15 to help us with this question. Here we go. So when we are doing VAT payments monthly, we can look here. So we have to do 9 monthly interim payments, which is 10% of the estimated VAT bill based on the previous return. And that gets paid at the end of month 4 to 12 in that accounting period. So every month in months 4 to 12, they pay that amount. Then they'll have a balancing payment, which is then due 2 months after the end of the accounting period. So let's have a look. Minhall plc will make payments of, so we need to make our decision on how much monthly payment there's going to be. So we've got to do 10% of the estimated VAT bill based on previous returns. So this is our previous return. So we are going to want to work out what 10% of that is, which is 3969. And that gives us our first answer. So they're going to make 9 payments of 3,969. This is going to commence on, it's got to be months 4 to 12. So because we're working on the year ending the 30th of September, it means their start is the 1st of October. The start of their year is the 1st of October. So it will be the end of month 4. So October, November, December, January is month 4. So the end of January is the answer to the second one. So they're going to start at the end of January paying £3,969 for 9 months. And now we need to work out what our final payment is going to be. So we will have paid £3,969 for 9 months. So that's going to be the first calculation that we are going to do, which gives us a total of £35,721. So that's what's been paid over to HMRC for this year so far. But our actual VAT due at the end of the year when it's been calculated was £40,770. So if we then take off what we have already paid over those 9 months, we get £5,049, which is our balancing payment. That's our final payment. And now let's look, it's 2 months after the end of the accounting period. So the end of the accounting period is the 30th of September. So 1 month after would be October, 2 months after would be 30th of November 2023.